The BNB welcomes you back to another video. Today we're going to be looking into a video recommended to us by a commenter. Commented that he wanted us to do a video on Ehang. Ehang is a Chinese company. You can see it from the name Ehang. And Ehang's investor relation page suggests many things about the company. I was able to find what the company does on their investor relation page. So for someone who is a beginner in the stock market, the best way to do research on a company is to write the company's name, write investor relation page, and the first link is the official, usually and most likely should be the official investor relation page. So it's a way for the company to incite people to invest into their company. And I will read what Ehang write about themselves on their investor relation page. They say Ehang is an autonomous aerial vehicle technology platform company. Our mission is to make autonomous and eco-friendly air mobility accessible to everyone. That is something that means that they sell drones essentially. So they sell drones, and that's what they're promoting, and their mission is to have everyone get an accessible drone to them, and they want to do it in an eco-friendly manner. As China is not a country that's known for its eco-friendliness, but we can see that this company's goal is to be eco-friendly. Like always at the BNB, we like to go in the bullish and bearish factor of each company. So we're gonna go into first of all the bullish factors of Ehang, the company itself. First of all, Ehang is in a growing industry. The aerial drone industry hasn't established itself in any way, shape, or form. Nobody has ever seen drones deliver anything to anybody's house. It's a bit growing in the Asian marketplace. So we can see that Ehang can profit from that. But for now, that's a good news for the company. The industry will grow, and them being somewhat a leader in that industry, it will allow them to as well grow themselves in the same time. So the revenue will grow with the markets or the industry of drones growing with itself. Also, it is a Chinese company. We also know another Chinese company that was able to profit from the Chinese government. That's the point I'm coming at to. So Ehang can also can get some kind of help from the government like NIO did. That could also be an amazing way, because we both know that NIO is creating eco-friendly cars. Ehang is trying to create eco-friendly autonomous drones. So we can see the correlation between that, and we can see that might incentivize the Chinese government to help this company. Also, since October 19, the quarter October 19 to the quarter October 20, discounting the last quarter, the company has been growing their revenue. So we've seen a growth in revenue. That means that the management is actually doing something. It's not a fraud. It's not a company that's making no money. They're actually making money. Their money is in yuan because they're a Chinese company. And also, we're not seeing a real substantial growth for the valuation that the company presents itself. But for now, we can see that they're growing, and they're doing the company and the management are actually doing something. The short ratio is only 1.52%. That means that corporations, big industries, and everybody don't believe that this company is a sell, so nobody's shorting the company for now. That can be considered as a good news, or also the bad news, because this stock won't be featured on WSB. But for now, in my opinion, right now, for this stock to have no short interest means that nobody believes this company will drop. Nobody wants to take the risk that this company will drop, so it's only at 1.52%. Also, this company is very volatile. Now, that can be taken as a bad thing or as a good thing. So in my opinion, I put it in the bullish factors, because that gives I like to trade companies, so that gives us a trading opportunity. If the company goes up very fast, very high, as the volatility suggests, that means we can trade the company and sell the company when we feel like it's overvalued. It's already overvalued, but I'd say somewhat overvalued to its current price point. So let's move to the bearish news regarding the company. First of all, being a Chinese company means that they can somewhat change their balance sheet. A company really known in 2019 when I started investing was Luckin Coffee. I started in 2018. Luckin Coffee came in 2019. Luckin Coffee, the fact that they were really fraudulent. They were the Chinese competitor to Starbucks, but they were faking their revenues and everything, and that ended up being something really horrible for the company, and they got delisted from whichever exchange they were on. I believe it was the Nasdaq, so they got delisted, and that's the same can happen with Ehang. So that's a risk you're taking investing in a Chinese companies. They can do whatever they want with their revenues, not whatever they want, but they have somewhat of a margin of maneuver. They can commit fraud, and it's not that easy for the SEC to regulate them because they're a Chinese company. Now, keep that in mind. Also, Chinese companies tend to trade at a lower multiples than their American counterpart. We can see Alibaba, they have the same business model as Amazon, and if you compare both their PE ratios, you can clearly see that Amazon is way higher. Amazon's dominance in the world is a bit higher at the same time, and they have a bit different business model than Alibaba. But at the end of the day, they have the same e-commerce way of doing, having warehouses and everywhere. Alibaba is growing; they're both growing almost at the same rate. So we can see that they have two completely different PE. They have I believe that Amazon's PE ratio is 3 times Alibaba's PE ratio. It is because investors or American investors are a bit afraid of investing in companies like that because of the delisting risk or any risk that can come with a Chinese company. Also, last quarter, the company lost more than usual. Usually, the company was expected to lose somewhat a relative amount, and then they lost more than what they were supposed to lose. That is something bad. You need to keep that in mind. The company is very, very speculative. Thinking, right? I have no real idea. That's all speculation. And the company, in fact, fundamentally is speculative in nature. The profit margin of the company are minus 48.65%. That is horrible. Also, like the cherry on top of the cake, analysts give the company on average a $14. So within a year, analysts believe after a year this company is going to be worth $14. That's a 64% drop from today's price point. That is really horrible if you think about it. If analysts are believing that, analysts tend to be wrong. We saw that with Tesla. There was an analyst believing that this company was going to go at $10 when the company was pre-split to $230. Which means at today's price point, it was at $40. And some analysts were saying this company was going to go to $1. There was others that were saying that it was going to go at $10. So don't believe what they say, but it's a good way to somewhat realize what a company is priced at. Some Tesla analysts were saying it was going to go at $4,000, like ARK Invest. So there was 2 different price points, but here the majority of people are saying on average, Ehang will go at $14. So keep that in mind. You don't need to base your decisions on analyst prediction, but it's somewhat a good metrics to realize and put your faith in. So to end this video on a positive or negative note for anybody listening to this video, I personally believe that there are better opportunities in the market. An example I can give is Airbnb, Tattooed Chef, maybe another company that I believe has a bigger potential than. It's not that the potential might be not as big as Ehang's potential because Ehang is so speculative in nature, but the fact that you have to manage your risk, and the risk with Ehang, in my opinion, is very, very high. If you like to take big risks and want to gamble your money in such manners, I could say go ahead and buy Ehang. But personally, if you want to consider the risk factor, there are so many better companies. Airbnb, let's say, like I already said it, and I have to repeat it again because I'm a bit over enthusiastic about Airbnb. The fact that their upcoming quarters are going to be really, really profitable because of the U.S. travel restriction being lifted in U.S. People are traveling a lot within the U.S. and when you travel within the U.S., you tend to use Airbnb. I don't know why this video turned into an Airbnb video. This was an Ehang video essentially, and I said that for the time being, this company is very risky. If you want to invest your money, go ahead. I would recommend other companies personally. I myself am not a financial advisor, so all of this wasn't financial advice, but it was somewhat for you to understand what the company is, and the company is risky. So if you enjoyed the video and this video added value to your lifestyle, to your life, subscribe to the channel, play Pokemon. That's what we love. Thank you very much.